Okay, good morning and welcome everybody to the Wednesday show. It's another exciting Wednesday and looks like I'm doing a solo show again. Jeffrey's tied up with some stuff this morning, so no big deal. I wanted to take a quick look around the markets and see what things look like. And then I want to take a look at some of the stocks that are theoretically could be triggering in today in a few open trades and just do a kind of a quick show here. It's been a little bit of a rough market lately. We've had some stop outs, obviously. A lot of stocks are not participating in a lot of stocks are not really doing as well as one might think based on just looking at the S&P chart, but we'll dig into that here in a second. So anyway, today at 2 o'clock, the Fed minutes of the last meeting come out, and so that should provide a little bit of excitement around 2 o'clock. And man, the market is really sort of still driven by news headlines. And I have this day circled up here. This was the actual Fed meeting. Amazingly enough, the market the day of the last Fed meeting, when they held rates unchanged, obviously, and basically said that they think they're in a good place, and as far as they can tell, they're just gonna stand pat where they are. The market seems to be thinking that they're gonna cut rates next, and big debate going on that whether the next move is a rate hike or rate cut or whatever. So and they're basically just sort of right in the middle. But anyway, it's kind of weird because the all-time high in the history of the world occurred that day, which was the last Fed day. And so today at 2 o'clock, the actual minutes from the Fed meeting come out, which may provide a little insight into what they were thinking. So I have this horizontal line at the previous all-time high. So it's kind of weird because the market had the big sell-off, the big rally, made like nominal new highs for a couple of days there, and then and then we actually had from intraday high to intraday low that was a 5.1% sell-off, right? And so as we sit right now, I have this zone drawn which encompasses these areas of resistance from back here. And right here at like 2800, this low here was 2801. So 2800, that's sort of, I put an extra line there. That's the big line in the sand right now, right? So if this market sort of, this little bounce that we've had here recently, if you can call it a bounce, it was, a couple of days up. See, it was last Wednesday and Thursday. And so inevitably when you get a dip like that and then a bounce, a lot of stocks bounce those couple of days, and that opened up some new trades, which we'll take a look at. We're going to take a look at some of the trades that have just opened up here recently, and as of last night, a handful of new stocks triggered, and so I want to take a look at those and see what they look like this morning. The market feels a little edgy right now. Like it could sort of go either way. And yesterday was sort of a narrow range day. It was actually one of the most narrow range days we've had since before the Fed meeting. So over the years, a lot of times a Fed meeting will and can mark sort of a turning point in the market, right? So I've seen it before. Markets kind of headed in one direction, and then, shortly after, either the day of a Fed meeting or shortly thereafter, you get like a little reversal. As a matter of fact, back over here, I don't really have it circled, but this day right here, it's kind of hard to see on the chart, but the market made a high, and then a few days later there was a Fed meeting. It retested the high, and this was the I believe it was the ninth hike in a row. It's either the eighth or the ninth. I'm pretty sure it was the ninth. And so they hiked rates. The market kind of shrugged it off for a little bit. And then, of course, we know what happened subsequently. So kind of interesting, that these two Fed meetings were right up there at the highs. So Anyway, so now we've had a pretty decent little pullback to support, and boy, it looked things were looking pretty rough that day. I believe that's when it finally dawned on everybody, the dawn on the markets, that there was no progress being made in the trade war with China, which has been the big thing. And so, a week ago Monday, we opened it gap down really big, and then it was defended right there at 2,800. I remember watching the chart intraday and seeing it like trying to kind of bottoming out right there. It was around 2,801, and boy, they really someone defended it right there, and then we got a bounce for a few days, and of course, you know, this Monday we came in and we had a fairly decent gap down on renewed trade war fears is what they always say, and that type of thing. So right now we're headed into a 3-day weekend, right? So this coming Monday, the market is closed for Memorial Day weekend. And I know I look forward to that every year. It's the beginning of summer and all that good stuff. So I like Memorial Day weekend. It already feels like summer here, but it's official and it's nice to have a 3-day weekend. So anyway, in the very short term, there's resistance right up here, and there's support. I suppose there's some support at Monday's low, right? Watch Monday's low there. And then, of course, bigger scheme of things, break down here. If for some reason we get sort of a rollover here, then watch out, because that's a 28 below 2,800. There's a little bit of a level right there. But quite frankly, the more it's been a little bit, it seems like it's been a little bit wild. But in the big scheme of things, it's just market's kind of range bound here, right? I mean, literally, like these couple of days right here. Let's see, what was that? It was a week ago Friday, and a week ago Monday. Those 2 days created a range, and the subsequent 2 4 we're working on 7 days here. So all these trading days are like in between those two, and so that's kind of created a range that we're just gonna have to wait for the market to break out of. And quite frankly, I'd be surprised. We got today, tomorrow, and Friday headed into a 3-day weekend. So my guess is that we stay inside that range. We don't. I suppose I suppose if some good news came along out of the blue, we could break above this level, but doesn't seem likely. Seems to me that we're probably looking at a few days still inside this range, and then that leaves everyone guessing on what happens coming in on Tuesday of next week. So hope everybody has a good Memorial Day weekend. Real quick, IWM kind of telling a little bit of a different story here. Um, it's the same sort of thing. There's uh, there's that range created by the same 2 days. There's this support level just down below here, right there, and so watch out on a break of that. Some support down here, but you can see that the Russell's been acting kind of wacky. So, anyways, amazingly enough, the Russell 2000 is a little bit more of, I would say, an accurate picture of what the overall market sort of looks and feels like, right? A handful of big cap stocks, account for a lot of what the actual market does, and so your typical average stock is kind of meandering around, not really as strong as the overall market. So, anyways, Russell 2000. Let's see, tech stocks got hit here pretty hard too. This was Semiconductors, SMH. Semiconductors have been on a big sell down since it looks like the trade war. I know we had one. I think we had one or maybe two semiconductor trades open um, in this general vicinity, and they got whacked on this leg down here. When we came in on Monday, that was sort of the big deal there. I gotta tell you the Nasdaq 100. There was the previous highs. All right. Oh, sorry. I zoomed out too far. So there was the previous highs, and yeah, made a pretty decent nominal new high up here. There was a lot of. That's what you would consider. I guess you could consider that sort of bull trap or a fake breakout or whatever, right? But it was pretty big, pretty big little sell down, and so we just had this little bit of a rally, and then it's trying to figure out which direction it wants to go here. If it breaks down, then we could be looking at a pretty rough environment. So we're kind of in a spot in the overall market where just about anything can happen. So the crazy thing is that for at least the last 6 months, the administration has been literally on a daily basis, sort of pumping up the market based on progress with the trade war in China. Kudlow would come on all the time, and Trump would tweet about it, and all this stuff, Mnuchin, and so I mean the administration, I mean literally, would try and pump the market up based on progress in the trade war with China, and then all of a sudden, that whole thing it just basically fell apart, and then it seems like out of the blue it started escalating. So, quite frankly, I'm surprised that we're not seeing a bigger sell-off. There's a lot of stock buybacks going on now that earnings season is has basically ended. Oh, and I wanted to mention one thing that last night there was some triggered trades. Pop over here to the triggered trades real quick. There was a couple that triggered that I had to basically remove from here. It was Best Buy and Deckers because they actually triggered in, but both of them are coming out with earnings tomorrow. And so the way that we do it here is if a particular stock is coming out with earnings, like within, well, if a stock's coming out with earnings tomorrow, right, it's going to get closed the day ahead of earnings. And there's actually, I believe, we have either two or three open trades that are going to get closed tomorrow ahead of earnings. Earnings season for the most part is over. However, there's always stragglers and companies that release on sort of weird schedules and that type of thing. And so tomorrow, I will have the ones that are going to get closed ahead of earnings posted. But occasionally, what happens is a stock will trigger because obviously stocks are triggering in based on what the chart looks like, and so they appeared on the triggered list, and then they automatically go to the open list right away. And then if I discover that, and I didn't discover this till this morning when I went through the list, that a couple of them, like I said, the Best Buy and the Deckers Outdoor are coming out with earnings tomorrow. So I mean, there would be no sense in like getting in them today and then getting out of them tomorrow. Yeah, that's not really what we're doing here. So anyhow, just in case anybody noticed that those two were triggered and that they're not triggered anymore. So to take a look at the open trades here. Oh, speaking of those two, let's just look at them real quick, just for the fun of it. So yeah, there you go. So Deckers coming out with earnings. I believe one of them's coming out with earnings after the bell tomorrow, and so the way we do it is we would close it right at the open, and I think the other one is coming out in the morning the following day. So anyway, there's Deckers, kind of big sell off, little bounce. Looks like it's potentially, but you just never know, especially with this company. There's the last earnings release there, so it actually had a sort of a similar pattern going into earnings. Got a pretty big pop. and but you just never know. And then of course there's Best Buy, same thing. Last earnings got a pretty good pop. It would have triggered in here, theoretically today, somewhere right in the area that it's in now, but it's it got removed because earnings are imminent, so we'll see. I'll leave that on there just for the fun of it. So let's look at some of these other ones that have triggered in here recently. Just have a look at these charts, see what they look like. Had kind of a weird open today. Yeah, this is an interesting looking stock. Not a big fan of banks. This looks like it has a relatively sort of tame and what am I trying to say here? The ATR. Okay, this one has an ATR of 2.3% over the last month. So that's what I mean by relatively tame. Anyhow, trigger price here 32.95. And so, yeah, trading right around that. I gotta be honest with you. Not the greatest looking chart in the world. As I go through these, I like to I'm gonna guess that the stop. Let's see, where's the stop? 32.15, 32.95, 32.50. Wow, that's a tight stop on this sucker. 32.15. I might as well put that on here since I'm marking it up. Yeah, it's that's actually it's a little bit higher than that. So it takes me a minute sometimes to get these on the chart. Yeah, it's pretty tight. I'm not a huge fan of this because, and like I say, the back end system. I mean, it's just calculating stuff based on based on the price movement and the pattern and all that. Pretty. I mean, it's a decent pattern, right? Big moving stock has a little pullback, reverses, starts to go up. But when I look at this chart, I think to myself, well, in order to like really get anything going here, this stock's going to have to, get through these highs and break out. And I don't have a huge confidence level on that, so I'd probably pass on this. You never know. SGEN also is on the triggered list. Let's see, 6680. I won't bother to and I hadn't marked these up yet. So I was doing some stuff last night, and so I thought it'd be kind of cool to mark these up on the show here. So that's a weird open on this. Quite actually, I'm looking at a 5 minute chart on my Thinkorswim, and like this little sort of anomaly down here was just that. It was an anomaly. It was like as soon as the market opened, well, let's look at a 5 minute. You'll see it. There you go. Yeah, these little weird anomalies typically occur right at the open, and maybe there was an order that got maybe there was an order for a couple of shares down there. It was like sort of it just happens. You've seen it over the years. I won't call it a flash crash, but yeah, longer term stock, stock looks okay. It's kind of this little pattern here. You got kind of a breakout here. What you got, and so clearly, and there's a pivot low down here. So this one's actually not too bad looking. There's a nice little sort of pivot low reversal there, and got the trend line break, and so it looks like it has some potential. So 6680, I might as well put that on there, is the trigger. 6680, and then the stop is down at 64 bucks. So that's going to be like right down around that low. Might as well mark it on here as long as I'm doing this. I'm not going to, as I go through these, I'm not going to mark each one, but since this one does look okay, I'm going to put this on here. And these are, like I said before, these are the stocks that are just triggering in today, or they're supposedly triggering in today. And so these are ones that if you were If you were looking for something, then wow, that was weird. S&P had like a couple of minutes ago had a big spike up, sort of out of the blue. I wonder what that was all about. Huh. All right, so fairly reasonable. The last time this thing triggered in, um, it had a pretty good rally, and a trailing stop came up, and then took a pretty big dip, sort of all the way back down to where it started from, and it looks like the trailing stop, obviously got slid up, and then came down and hit it, a little bit above the entry, so no big deal. And quite frankly, it actually went on to make it's a really volatile stock. So biotechs have been sort of struggling lately, but that last little cycle on this stock was not bad. Um, but there was a lot of got knocked out here, a little bit above the entry on volatility. So we'll see what happens this time. And that's a pretty long range day there we've got looking at. So now let's move on. IONS. This one, this one's kind of interesting. Yeah. So you'll see some of these same stocks cycle through. I'm not real keen on this one. I'll tell you why. Let me just see the entry, 68.80. So like basically, roughly like right where it is here, right about the same spot it is here. I'm not a real big fan of this because big move down, consolidation, another leg down, and consolidation, and I've seen this before. I've seen this before, so I would quite frankly, and I mean this could work, right? But could work. Like I said, the back end system is just it's going by the data that it sees, and so it sees a stock that's in an uptrend and it's had a pullback, and this is like second pullback. But as I look at this chart, basically, I'd be more inclined to see if it can break over like that level there. So. And what's happening here is like it's the system sees this consolidation, and then you got this little sort of cup that broke out there, and so anyway, let's look at the next one. Some retailers came out with earnings this morning. This one doesn't look so bad. This one looks a little bit. The first one, a little iffy. The second one looked pretty good. The third one, a little iffy. This one looks pretty good to me. So let's see. 130.20 is the trigger price. So mark that on here. It's a little tricky sometimes to get these accurate, but and so basically you had a really nice sort of sell down, and then this bar right here, that was like gap down reversal bar, and then you got some follow through on that. So it's got a pretty good look to it. That's got a pretty good look. I'm gonna guess just based on. I'm gonna put this right here, and then I'm gonna look over on my other screen and see if the five below 123.60. Let's see, what was that low there? 123.64. So yeah. So anyway, system is using basically that low, that sort of reversal bar low as the stop, and pretty wide stop, but it's basically one day there. So let's move on. WHR, that's Whirlpool, good old Whirlpool. Zoom out on this chart a little bit. Interesting. Short term uptrend. Longer term, it's kind of a downtrend to be honest with you, but you do have the W pattern. These W patterns, I haven't seen a lot of W patterns lately, but these suckers are powerful. Typically, when you see, and you can see what I'm talking about here, they're sort of right here. Back in like 2015, 2016, the overall market had a couple of big sell-offs and formed a couple of these W patterns, and typically typically when you get a breakout of the right side of the W, you get a lot. You get follow through. Put it that way. So it's a relatively constructive chart. Trigger price 131.90, which is roughly where it is right now. It's basically right there, and so not a bad look to it. Stop down at 126.55. That's going to be around these lows here. So, like I said, I'll label these at another time so it's not. And so yeah, I mean here we go. And so on Whirlpool here, we're looking for a target of 140.95. So that's going to be right up around there and looks totally doable. Doesn't look bad at all. Right up there around 141. So it looks like a pretty decent risk reward. I mean that the thing about this thing to keep in mind is that like starting off, the initial stop's going to be somewhere around the lows of the recent pattern. In this case, is sort of like a little bit of a consolidation pattern, and it's starting to break out of this consolidation to the upside. If I had a stochastics indicator or a MACD or whatever, they'd likely be starting to turn up here. So a little bit of follow through to the upside, and this stop will get trailed up. So Whirlpool doesn't have too bad of a look to it. Yeah, market's been a little bit tough lately, and like I said, we've had some stop outs in that. But the thing of it is that this pullback that we've had, and sort of like this turmoil or whatever. One of two things are going to happen. It's going to intensify, or the market has been amazingly resilient, right? Like amazingly resilient here recently, and so some of these stocks that are triggering in, and some of the open trades are doing really well. As a matter of fact, I wanted to mention this. Now's probably good a time as any. This Cray right here, right? This is kind of a weird one because, and I think we talked about this. I think we looked at it either last week or the week before because it had this huge gap over the trigger, and then sort of pulled back in a little bit, and I mean it was just this is the most bizarre sort of, and this will happen though. This will happen. You'll get like the day that theoretically it triggered, it opened up near where the target was. And so obviously, just sort of based on the chart. And the funny thing is this was the buyout news, right? Hewlett Packard is buying these guys out, and so there was this huge gap up here. But I don't remember exactly what happened this day, but there must have been some sort of news or rumor or something like that. It wouldn't have been earnings because we wouldn't have had it on the list if it was earnings. So anyway, crazy. I mean, it's some crazy price action. So now, it's just sitting up there. Anyway, let's move down the list here. So we looked at Whirlpool, not bad. Let's look at Tempur-Pedics. Huh. Yes, this is a pretty nice looking chart right here. Good old Tempur-Pedics. Just in time for holiday mattress sales, right? TPX. Let's see. The trigger price for today is 63.15. So there we go. So yesterday, I mean, it closed. Let's see, 63.15. Closed a little bit over the trigger. The low today is 63, and so this is sort of this is one of those stocks that theoretically you could have got filled at the exact trigger price with the limit order. And it's got a pretty darn good look to it. This is actually a beauty, right? Let's take a look and see where the system has calculated a stop on TPX 61.65. So that's a pretty tight stop. 61.65 is going to be over here. And that's a nice tight stop. So basically, you got a pivot low, sort of a sell off, little reversal bar. I don't know what that gap up was about, and little pivot low here, and so the system is calculating the stop right down there around that pivot low instead of way down here. Instead of way down here. So that's it. This is a pretty good looking setup right here. Really super tight stop. And the thing about it is the tight stops are a double-edged sword, right? I mean, you've seen some of the trades getting stopped out lately for really small stops like this, and so sometimes normal volatility is a fairly volatile stock, and so one of two things are going to happen. I mean, it's either going to get some follow through to the upside and form this cup pattern, and the way that it's been acting, it's been running up, and sort of each rally has been taking it to a new high. And so, you can think of this one as like, hey, this is either going to work or it isn't. And if it doesn't work, if it starts to roll back over and head for that trend line, then out with a very very small stop out. And so this is a one pretty good looking. This might be my favorite so far. Kind of hate to say that because they don't always work out just because I think the chart looks good. Right? The market has a mind of its own. It never does what you want it to do. So let's see. What is the target on TPX? 67.75. 67.75 looks totally reasonable. Um, yeah, I mean it is up within the realm of that sort of pivot high reversal bar, but looks totally doable. So I like this one. And of course, the stop will get ratcheted up as the price moves, and it could go it could go well beyond this target. Right? It could sort of based on this chart here. Like I said, each one of these rallies sort of takes it higher. So a lot's probably going to depend on the market and Memorial Day mattress sales, right? It's amazing how the mattress business. I don't get it. I mean, I honestly don't. We have where I live. We have like a mattress. There's a building, a standalone building in like a big, in our grocery store parking lot, like a sort of a little plaza and that standalone building that's relatively new. They built it, from the ground up. There's a Starbucks and a mattress store, right? And every time I go to that Starbucks, there's never, I don't think that I've ever seen, and I don't go to Starbucks that often, but I've never seen anybody in the mattress store ever. There's like one employee sitting there at a desk, and then the crazy thing is like literally like across the street is a different mattress store, and the same thing there. There's a bunch of restaurants in this little plaza, and the mattress store is basically like in between a bunch of really super busy restaurants, sushi place and Thai place and a burrito place and a Jersey Mike's, I think, or whatever, and you never see anybody in the mattress store. And so I think that it just doesn't make any sense. I mean, how in the world, how many mattresses do they sell? I don't quite get it. I always joke that maybe it's a front for something else, but apparently, yeah, the mattress business, people must go there and buy mattresses, or they wouldn't be able to keep the place open. But I don't get it. So somebody can explain to me how the mattress business works. I would love to hear it. Anyway, so let's move on here. I don't want to take up too much time. SMG, Scott's Miracle Grow. Hey, it's a good time of year, right? As a matter of fact, my girlfriend just last Sunday got out there and did a bunch of planting of all this stuff and fixing up all the flower pots and that outside for spring. And so here's, I know she's got some of this stuff, right? She's got bought a couple of pouches of I don't know if it's Miracle Grow, but they make all kinds of stuff for yards and plants and all that. This may have been the last earnings release. I would guess that. Let's zoom out on this chart here. It's amazing. You know what's amazing to me is that I don't always zoom out like this far on a chart, but this looks like an earnings miss, like way back here. At the beginning of 2018. I mean, these charts go back 2 years, right? So whatever happened back here is probably not really that relevant right now, but stocks short term, which is what we're dealing in here, right? Stocks on the comeback trail. Looks like a nice big earnings pop, and then they typically, fade down a little bit. Now it's turning back up. So let's see, SMG 89 bucks even was the trigger price. That's going to be down here a little bit. Let's see, 89, and close above the trigger, kind of hanging in there a little bit. So, the real sort of trick is we recommend the easiest way to get in these things, not really sweat it. Like Jeffrey always likes to say, you're taking small enough positions that you're not really sweating the nickels and dimes and quarters. So looks like when this opened, there was a little bit of a little bit of so it opened, and 5 minutes later it took a little bit of a this is actually a 5 minute chart, so took a little bit of a dip at the open along with the overall market, and it's kind of rallying back. And so with the trigger being 89, where'd it go on my list there? 89 even right there. Yeah, an extra 60 to 90 cents, not going to be a big deal. It's not going to be a big deal because, like I said, one of two things is going to happen. It's going to continue to rally up here, or it's going to break down, and I'm going to, before I even look at my other screen, I'm just going to draw what I would guess would be the initial stop right here. Let's see, 86.70. And so, yeah, I got it just about right. It's actually a little bit higher than what I drew there. A little bit higher. So I'm going to mark this one. Initial stop 86.70, and I'm going to put the trigger here. Trigger 89. So there we go. So yeah, I mean, one of two things can happen. It's gonna be able to continue back up here and attack these highs up here. So real quick, let's see. The target is 93.60, which is just above these highs. So 93.60. Mark that target on here, and so that looks doable. This is another pretty decent looking one, because I like the fact that it's sort of, had the pullback after the big earnings pop, and it's starting to come back. The only thing is, in a weak market, they trigger in like this, and then if the market, which is tried to rally this morning and is starting to roll back over, if the overall market breaks down, then these just aren't going to work, and that's just sort of the nature of the environment, right? So keep that in mind. All right, next on the list after Scott's Miracle Grows is JK Solar. Boy, this one last time. Let's see, last time. This is one volatile stock, man. Interesting. Interesting. This thing ripped higher and then came back down. Seems to me, maybe not. I must be thinking of something else. There's another solar stock. Same sort of thing here. JKS 1880, gonna be right about there. And so, actually, this morning, interestingly enough, here's something to keep in mind, right? This doesn't happen real often, but Okay, so yesterday it closed above the trigger price of 1880. This morning it opens down here, at 1830 or whatever. If this had been a big red candle down, then it would have not triggered, right? And so the way that the system works, if it triggers in, it just puts it right on the open list immediately. But if the stock doesn't actually trade above the trigger price the following day, then it's going to remove it because it didn't physically trigger. So just keep that in mind. On this particular one, though, opened lower and then pushed through the trigger. So there's an instance where would have been able to get in at the trigger price. Stop on this 1730. So that's going to be up here. I won't mark this up yet. I'll just put the actual line on here. So 1730. Let's see about the trigger on this because this has a habit of making these big ups and downs here. So let's see. Trigger price on JK Solar is 2110. So it's gonna have to make it up to there to hit the target. What I said trigger, I meant target. So there's target on this. Up there, 2110. So hey, this is kind of reminds me of what I was saying on that previous one. Either works, or if it doesn't get the follow through to the upside, if it happens to kind of like this run up here sort of failed really quickly. Some of these other run ups, they were quick. I mean, this is one crazy volatile stock, right? And so one of two things happens here. It either gets that momentum like it did on that run and that run, or it's a run like this where it's kind of half over, comes up a little bit more and then rolls right back over. But that stop should come up pretty quick on this, just based sort of on this behavior. I would think that stop would come up quick. So it doesn't look too bad. Let's see, Dix. Yeah, here we go. So Dix. All right, so we just went through all the ones that have triggered for today. Dix actually triggered. Let's see, DKS triggered on 520, which was this day, and so this would have been one. This would have been one that actually would have been a buy at yesterday's open, and or at around yesterday's trigger price. This is a pretty good looking chart right here. It's got the same sort of behavior, and so if oh, my cat has something to say. I wanted to find Dix on my list over here in my Thinkorswim to see about earnings, because I know there's a bunch of retail earnings come out. A couple of retailers got slammed here. I think it was Nordstrom got slammed on earnings, and then Target did pretty well. Dick's earnings on 529, and so that's not a whole lot of time here. Let's see, 529. I'm gonna mark this here. When is that? That is a week from today. So that doesn't give a whole lot of time. So my guess is that it's not going to hit the target of the, most likely anyway. It's not going to hit the target of the stop ahead of earnings. But yeah, it still looks kind of reasonable. I mean, with a few more trade, all it takes is a few days of a pre-earnings run up like it did over here, and could end up to be a pretty decent trade. So, AutoNation, this is a beauty. AutoNation is another one that I mean, it's basically trading right around the trigger price right now, but really nice run up and then a big spike up. I don't know if that was earnings or news or whatever, but this is exactly the kind of pullback that I like to see. So this one triggered in on. I'm trying to get that trend line straight where I want it. AutoNation triggered in on 517, which was right here, 39.95, and it's just kind of, it's kind of, the high today is 39.98. So it's kind of floundering around here, but boy, that looks pretty good. This one I like here. So there's a few of them that look good there. So few of them that look good. So anyway, let's see. Alan, do you prefer net change versus open versus close on your charts? Question coming in. Do you prefer net change versus open versus close? On my chart, I have open versus close. And the reason is, I actually prefer that. I like to see I like to see if like I have and what he means by that, and what I mean by this is the color of these bars is based on not whether the stock was up from the previous day, like higher than the previous day's closed. It's based on whether the stock closed above or below its opening price. So let's see if I change that, just for the fun of it. If I change that, now watch and see if any of these bars change color. I didn't really see any on this, but anyway, the open versus close. The reason for that is sometimes you'll see stocks that like every morning, well, not say every morning, but many days they gap up and then they go down from the open. And then maybe the next day, gaps up a little bit and goes down or whatever. I like those bars to be red so that I can sort of see what the behavior of the stuff. To me, it's like that's like my little bit of an edge, I think. And I've been talking about that for years, about looking at open versus closed, because I mean that's the smoke screen. I've been saying it for years. The smoke screen of the whole market. It's like if the market gaps up real big and then spends the whole day selling off, and ends like a little bit higher than it did the previous day. CNBC's like, oh, the market was up today, even though the market spent the whole day going down. And so the idea is that by looking at it that way, and I know you know this, Alan, because you've been around for for years. The way of looking at the market based on today's open. Um, and so, like, you get these days where you get like a big gap down on news, and then the market spends the whole day driving higher, and guess what? All your stocks spend the day going higher, right? And the one that really gets me is when the market gaps up and then right from the open starts dropping and dropping and dropping and dropping, and it's like you're watching all of your stocks going down, and CNBC's talking about a market rally, right? Simply because the current price is above yesterday's close, even though like the intraday action is in the opposite direction. So anyway, that's why I have my colors based on open versus close, right? And so, I mean, not every, and it doesn't really affect every chart. It doesn't make a huge difference, but it can be a subtle difference anyway. So, I like the look of this AutoNation. I really do. Yeah, that was actually a good question. Good question, Alan, because I know some of the viewers may not have caught on to that little tip. So anyhow, there we go. AutoNation. Let's see. I go down one more. Yandex. Yandex. I already have this one marked up. So, and now I'm getting into ones that like Yandex triggered basically like this day. This was the 516. So now we're going back a few days here. Going back a few days. So that would have been the trigger day. Interestingly enough, and this is kind of this is a interesting sort of situation because we see all sorts of different variations come through. Like here's a case where a lot of people say, well, what happens if the price closes way past the trigger, the next morning it opened like way down here, right? Like it closed up here at 37 and a quarter, and the trigger was 36.55, and so the very next day it opens like right down here, basically at the trigger price, and then did that. This is a huge day. So Yandex, the Russian search engine, in case you didn't know what that was. So target on this 39.05. Let me just mark that on here. I've got everything marked on here, but I never did mark the target. So anyhow, one of the things I like to do is one of the things that I do, since I'm sort of running the show over here, is I go to the open trades here. I export the whole list as a CSV file, and I wanted to sort this to see some of these that are. We talked about this NGL last week. I like to export this as a CSV, and then I basically go in and open up that CSV, copy the ticker symbols to a notepad, and just import the whole thing right into my Thinkorswim. It takes like maybe 20, 30 seconds to do the whole process. The longest part of the whole process, honestly, is waiting for Excel to open up. But anyway, so what I do is, and especially, there's typically, obviously, there's more open trades than an individual is going to have, and so the individual's got to pick and choose. But I like to keep a watch on the entire list myself, and so anyway, I do that, and so like when I look at it on a daily basis, I can see which, like, this IIPR. I didn't even mark this one up. IIPR. This is the biggest gainer here today. Wow, look at this. There's the previous trade on it. Did a little waffling around, and it's triggered in again today. Or no, I'm sorry, not triggered in today. It's the biggest gainer today. The trigger date was, and you can probably see that on here, was back here on the 15th, 84.45. So there you go. This is one of those cases where, sort of blasted through the trigger, and a few days later came back, touched the trigger, and now looking pretty good. So kind of interesting. This team has been pretty interesting because it's actually been one of the bigger gainers for some time on the list. And I mean, this thing triggered in way back here on 429, back over here this day, and it's been pretty darn volatile. Now I haven't moved the stop up on this. The current stop is at 119.20. Some of these, instead of putting a new stop on there, new stop on there, especially one like this, because it's made such a dramatic move. Sometimes I just keep the current stop on here, and I just sort of adjust it as it goes. So interesting. 119.20, and of course there's a parabolic stop. The parabolic stop on this actually got hit. It was up at 126.05. Where was that? 126.05. So, the parabolic stop would have been, and a lot of times I don't mark those on there. It would have been right under the low of that bar right there. So as long as I'm putting it on here, I might as well make it the proper color. So there was a parabolic stop. Anyway, this one's still rolling along. That stop to me is still trailing along pretty well. So, thing about it is stocks like this. I mean, look at this dramatic move. This is a 30 something percent move that it made here, Now it's on another tear, and so this is the kind of stock, especially these high price stocks. I mean, this thing could keep on rolling. So it's actually good that this stop is trailing, far enough behind to leave this thing a bunch of breathing room, because this thing could continue on up to here, you know. So there you go. Anyway, I pulled that up because I noticed on the list. See, last one here. Boy, I can't believe I've gone an hour already. Is NGL, right? Talked about I talked about last week how this sucker was yielding 11% or whatever, and we looked at the previous trade here, but and I talked about peeling some off maybe. So anyway, thing about NGL is besides the uh, besides the 11% dividend, it is a limited partnership. So some people don't like those, but anyway, the target was up here at 1470. I'm surprised I didn't mark that on there last week, but I didn't want to jinx it, I guess. Anyway, so there you go. Hit the target at 1470. That would have been a pretty good spot to peel some off. But like I said, with that 11% dividend, it was an interesting sort of idea there. And so, what I wanted to mention about this last thing is that these guys are coming out with earnings, right? The earnings are on 5:30, which means that this trade is going to get closed. Um, See, 5:30 before the market opens, right? So that means that basically the open this day, the day before, which is a week from today, next Wednesday. So whatever the opening price is on this Wednesday, the trade gets closed. And so I mean, hey, this thing it's going to get closed, and it could just continue to go up or whatever. And so that's where the discretion comes in. It's kind of like I talked about last week with the dividend. I talked about the idea that one could take a partial position and maybe look to hang on to some, scale out, sell some at the target, sell some ahead of earnings, whatever. But um, yeah, typically, these there's not a whole lot of high yielding stocks that aren't like these. I guess you could say that this is well, oil and refining and marketing. It's like a MLP or whatever, but and of course you got to deal with the K1 and all that good stuff. However, that's a pretty strong dividend, right? In this day and age of the Fed and their 2.5%, 2.25%, 2.5% Fed funds rates, and all this and that, man, you don't balk at an 11%. Plus this thing's made a pretty darn good move already, right? And so there you go. Anyhow, so that's that, and I'm going to wrap this up since I've been yammering for an hour. Looks like the market, real quick here. Um, Keep in mind what I said before. I don't expect anything too dramatic, but I mean the market's been kind of it's been kind of wacky. There's a lot of news. It's going to be really interesting to see what happens when the Fed minutes come out. But to me, right now, the zone to sort of watch here is these highs. Call it 28.95, or this is actually like 28.93, but these highs here, the market's going to have to bust above that if it's going to cup up and attempt to make new highs. I mean, here's the thing: every one of these pullbacks or dips that we've seen so far this year, and there's been two. There's basically like one dip. This was just a little bit of a little like a 1 day sort of phenomena here, a little consolidation, and so this is just what they like to call a garden variety 5% correction or 5% dip or whatever. And so right now the market's on the fence post. It's consolidating here, and I'm thinking, this is a huge zone of support, which you guys know I've had this on the chart for, I've had this on the chart since back here, right? All it took was this sell off and these two bounces right here to like the exact same level that it couldn't push through. And I started drawing this zone on the chart like last fall, right? And then of course, the zone, it was perfect because it encompassed like this high too. And anyway, so that's all history. But now this zone is like a huge support level, right? We kind of tested it over here. It acted as sort of resistance right here in like February, and once it broke through it, now it's acting as support. So you break if you break down below 2,800, things could get nasty. Although there is support, along the way, down here at lower prices, but things could get nasty below 2,800. We're sort of on the fence post in the middle of this range. We're just range bound. A lot of stocks are not acting nearly as well as the S&P 500, but so keep an eye on this. And of course, there's 2 more trading days, likely to be relatively dull. Stay in that range, and then we head into Memorial Day weekend. So hey, I hope everybody has a great Memorial Day weekend. Get some rest and relaxation in. Hopefully, the weather where you are is going to be nice. It's been beautiful here. It's almost like summer started here a couple of weeks ago. But anyhow, I hope y'all have a good Memorial Day, and I'll see you back here next week.